The crypto market is a sea of red. It's what everyone's calling the great crash of 2025. So today, we're going to unpack what is going on, why it's happening, and maybe most importantly, where the smart money is heading. Let's get right into the numbers.
Okay, first you just have to wrap your head around the scale of this thing. Over $1 trillion. Gone. Wiped off the market since its peak. That's more than the entire economy of some countries. Just vanished in a few weeks. It's a mind-boggling number, and it really sets the stage for the chaos.
And the mood that goes with a number like that? Well, it's officially extreme fear. And look, that's not just a dramatic phrase. It's a real metric of how investors are feeling. And right now, confidence has completely bottomed out. You know, when fear gets this high, logic just goes right out the window. It leads to panic selling, which just drives prices down even faster.
So let's zoom in a bit and look at the damage report, because this isn't a problem with just one or two small coins. No, the pain is being felt everywhere.
Just take a look at this. It's a bloodbath. Bitcoin, the king, has tumbled to its lowest point in 7 months. Ethereum is just getting hammered by relentless selling. And even coins like XRP, which tried to hold on for a bit, are getting dragged down by this powerful, market-wide current. Nobody is safe.
But here's where things get really fascinating. Amid all the chaos, look at Bitcoin's dominance. It's holding strong, making up almost 60% of the entire market. What this tells us is that while everything is falling, Bitcoin is actually falling less than a lot of the others. It's reinforcing its spot as the market's true center of gravity.
Okay, so this brings us to the big question, right? The trillion-dollar question. What is actually causing this? Well, it's not one single thing. It's more like a perfect storm of negative events all hitting at the exact same time.
Think of it like a domino effect. It all starts with the big institutional money pulling out of those Bitcoin ETFs. Then you've got these wider economic pressures in the US squeezing everyone. And all that selling pressure, it triggers the final and honestly the most brutal stage, mass liquidations.
So what in the world is a liquidation? You really have to understand this to get why these crashes are so violent. Basically, when traders use borrowed money, what we call leverage, their positions get automatically shut down by the exchange if the price drops too far. This forced selling pushes the price down even more, which, you guessed it, triggers even more liquidations. It's a vicious downward spiral. And the scale of this forced selling is just wow. We're talking about $1 to $2 billion in these leveraged positions just being completely wiped out. Can you imagine a huge wave of sell orders hitting the market that don't care about the price? That is what pours gasoline on the fire in a crash like this.
But here's where the story takes a really interesting turn. Because while everyday investors are panicking and leveraged traders are getting wiped out, some of the biggest and frankly smartest players in the game are making some very, very different moves. I mean, just look at these signals. They completely contradict the panic in the streets. Kraken, one of the biggest exchanges, is so confident they're filing for an IPO. Harvard's endowment is buying more Bitcoin ETFs, not selling. There's good news on a potential XRP ETF. And a massive pile of Shiba Inu tokens is being moved off exchanges, which is a classic sign that people are planning to hold on for the long haul. These are not the actions of people who think the party's over.
And this way of thinking is being echoed by well-respected analysts like Tom Lee. They're framing this whole situation completely differently. Where most people see a disaster, they see a fire sale. You know, a rare chance to buy into valuable assets at a massive discount.
So what this all boils down to is that we are at a genuine crossroads. The market is being pulled in two totally opposite directions by two completely different stories that are playing out at the exact same time.
And this really is the heart of the conflict, isn't it? On one side, you have all the short-term reasons to be worried. The fear, the money flowing out of ETFs, the bad economic news. But on the other side, you've got institutions like Harvard buying, companies like Kraken building for the future, and analysts calling this a bottom. The present feels incredibly bearish, but the future, well, that could be incredibly bullish.
And that leaves us with the ultimate multi-trillion-dollar question. Is this just another brutal but temporary dip in crypto's wild ride, or are we watching something more fundamental happen, a long-lasting reset? The answer to that is going to define the next chapter for this entire industry.